All right, so agenda today, we got Aaron Warwick presenting on NMRD, then Florian Bushek on PALAF. We'll go through trade of the week. I hear someone's mic audio, if we can mute that. Actually, let me just check our security settings. Okay. Okay. All right. Quick disclaimer, I'm going to spend a little extra time on this. So Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. We're recording this for paid subscribers only. A couple things additional I want to mention, given the market volatility, that any stocks that are presented here by anybody in the community, whether it be Aaron, Florian, myself, anybody, we can change our positions at any time without notice. Without obligation to tell you that we're changing those positions, because the market is so volatile and you can see stocks go up, down 30, 40, 50%, whatever it is. It's just crazy time. So just want to put that disclaimer out there. Also, I want to put an informal poll out there. If you could get back to me if you have any special thoughts on this on WhatsApp. We're thinking of soon making our recordings available on social media on a delay. So our paid subscribers will get in ahead of time, be able to see all the content ahead of time, and then we'll release that on a delay. We have to think about how many days, but let's say, 3, 4, 5, maybe 7 days. And there's two benefits to that. One is we want to grow our community. So we want to get the word out there of how successful our community has been. And the other thing is it also helps you guys get the word out about a stock. If you present a stock here, we can help get the word out by publishing that on social media. So just a little informal poll. If you want to private message me throughout this week and let me know your thoughts on a policy like that, or how long that delay should be before we make it available on social media, definitely welcome that feedback. All right, so featured presentations. I'll make a couple comments and I'll maybe turn over to Rob to mention some, but this is absolutely stunning and incredible how we've been doing. 79% with an average holding period of just 4 months. I mean, pretty much every single Celsius. Dan Carlson hit it out of the park with Adam. Rob's Real Networks, 185. I mean, absolutely incredible. It is unprecedented times. I don't think we can expect returns like this always, but Rob, did we have a couple additional comments on this?
Yeah, pretty much everything in the whole chart is green across the board. Within 80% is not very unusual for like 3 or 4 stocks if you pick the right ones, but to have maybe 15 or so stocks with a total return of 80% in 4 months is amazing. It's a great job by all presenters, and maybe doing your due diligence. The only thing I could say is now that the market's getting kind of crazy and wild, we still want to stick to the strong stocks with kind of great products, great futures, great fundamentals. And even though you think a stock could run because it has crazy sentiment, just sentiment, I don't know that we want to take a look at that one.
Yeah, and, you brought up a good point. I want to remind everyone, Dan Carlson, we have to reach out to him. He didn't close his position. He still says he has a large position, but he did say he trimmed it in the Adam room. He said he trimmed his position because the stock has gotten a little ahead of himself. So Rob, you make a good point. Anyone who's presented any of these stocks, maybe Florian, you might want to look at David's T, but let us know if you think it's time to close it out of this presentation list. Everything that's listed here is basically stocks that you think still is a buy. That's the idea here. We have INTZ, which we closed up 175%. We should probably create a separate table side by side to show the ones that have closed out, but please let us know if you change your opinion on a stock.
Yeah, because we also want to get a view of all the stocks that still have room to grow and room to run up. So if you've closed out most of your position, let us know, like Ben said, and we could close out the position here and make more room to watch other stocks and give everyone else like ideas of what they should be buying and what hasn't run yet.
Yeah, and maybe a simplistic view, the top of the table, everything's up about 100%. Down here, maybe they're coming next. I don't know. Maybe that's where you want to be overweight in, are these PBI, MLSS, Kintera, APT, these stocks.
Yeah, some of those ones are the ones that haven't run yet. I agree.
All
I think
right. So, sorry,
for
go
it.
ahead. What was your last comment there?
There are some at the top, like what was it, BCRX, SMSI, and Real Networks still have room to grow, even though they made it to the top of the chart, and like TFFP as well, DRIO. So we should probably just clean up the chart and see what's left over. But some of the highest runners still have a lot of room to grow.
All right. So let's move on now to Aaron Warwick's presentation on NMRD Medical, NMRD. Here's a quick chart while we get his microphone and everything set up. Stephen, if you can take care of him. Or Rob.
No problem.
Hey guys, can you hear me now?
We hear you, Aaron.
Okay. Sorry, I got my camera off. I'm just getting home. I thought I would be home in time and I got held up, but it's fine because I still know what I want to present and everything. I don't have a specific outline. You can see if you want, if you have access to it, I released a Seeking Alpha article this week. It was actually sent to their pro subscribers when it was published on Wednesday morning, I believe it was, and then it was made an editor's pick, and I've gotten more than twice as many views on that than any article I've ever written, actually. So there's a lot of excitement. I think it's because of the industry that they're involved in and what they're dealing with in continuous glucose monitoring. Yeah, I'm glad that you guys brought up the point. You know, obviously this stock has run since I released my article. The day of the article it went up. Before that, I'd made some people in some of our communities aware of the stock, and so it's run quite a bit. I think actually some people got in it lower than I did. I started buying and at about just above 5. It went down. I bought some more. It went down. I bought some more. In terms of my own personal portfolio, I mean, I'll just be completely transparent. I bought more on Friday as well, because the more that I learn about this company, the more excited I am about what they have to offer, what they're doing, and what I think the future is. So, you know, obviously I liked it a lot more at $4.25, but I still,
Yes.
I,
All right. What was that four-digit code?
but I still like it
7172.
here.
Thank you. Would you like your answer the tongue?
Guys,
Please, thank
please,
you.
hold
Thank
on.
you.
Let me, someone's mic is on. 1 second, Aaron.
Yeah, no problem.
Okay, I think someone's okay. All right, we're good now.
Okay.
Could be good now. Go ahead.
Okay, so anyway, to give you an idea about the company, they're actually pre-revenue, so they don't have any revenue right now. They started about a decade ago. They broke off from a company that's still privately held called NMRD Pharma. And so that company, basically what they were figuring out and what they do is they deliver pharmaceutical products through the skin. And what they, in their research and development, what they figured out is, you know, wait, we can also not just deliver products through the skin, we can also collect things through the skin. And so this started, again, almost a decade of research and development for NMRD Medical, which required them to also then go to the public markets to raise capital. That being said, a significant amount of that capital was raised from insiders, people who are also at NMRD Pharma. And the insider ownership is like 57%, I think it is, in the last 10K. In addition to that, there's a 5% or above insider holder, I should say, that I think owns like 11% or something like that. And then in talking to the company, there are a significant number of people who have less than 5% of the shares that are pretty tightly held. None of the insiders have sold. None of these people have sold along the way, including last year when they were added to the Russell and the stock went into the $15, $16 range, because they believe in the long-term of the company, and that's what I'm going to get to here in a minute, why I'm so high on this company right now. So that said, even a lot of this capital was raised from insiders, and the insiders are highly vested in the long-term interest of this company. So why I'm excited about them now is because although they're still pre-revenue, I think by the end of this year, they should have some revenue, and then that should really start to ramp in 2022. And of course, the stock market, looking at the future, is not going to wait for that to happen. They start announcing some big deals. And even before the revenue starts to come in, obviously the share price is going to appreciate as the market digests that news. I was introduced to the company at LD Micro back in December. I was extremely impressed with the presentation that the CEO gave. And what really sort of raised my antenna was the fact that he had talked about how the company had basically pushed back licensing their product, had pushed back partnerships on their continuous glucose monitor until they were ready, until the company was ready to start commercialization. So in other words, they wanted to make sure that they had a product that was as good as they wanted it to be before they started taking it to market. And they weren't going to be pressured to do it prematurely. So what they have developed is this continuous glucose monitor. It's a device that a person puts on their arm. There's a disposable that goes with it. You use a different disposable every day. Every day you have to recalibrate the machine, the device, so that it measures correctly your glucose levels. And instead of some of the devices that are on the market that you might have to insert or have on you, or might be more intrusive for, usually I think it's 14 days at a time, the device that's called Sugar Beat is what they've trademarked the name. Sugar Beat only has to be worn about 4 times a month, and it can be done at various times throughout the month, because studies have shown that this is sufficient for most type 2 diabetics, and certainly for pre-diabetics, to get an idea of the trend of their glucose monitoring. Now, what happens is this information that they collect of your glucose levels is sent to an app that eventually will be given to you. I can get into the differences here later about what's approved in the US right now and what's approved in the EU. But essentially, you're going to, one way or another, you're going to get the information about your glucose levels. And then they have a program called Beat Diabetes. There's a website available for that. I can share the link to that in the VIP investing room later today. But there's a website called Beat Diabetes. And on that website, there is all sorts of diet and exercise lifestyle changes that can be made, coaching that can be done to help people overcome and beat diabetes. So the partnerships is what I'm really interested in now. This is why I'm very high on the company. As I said, at LD Micro, they mentioned pushing some of these back, and now they're commercializing the product. So they just hired, actually this week, they came out with a press release early this week, and one later this week. They hired heads of commercialization in the US, one in the US and one in the EU. Extremely impressive. I encourage all of you to go to their website, look at their press releases on those, and see the history, the background of these hires. They've got a lot of experience in medical device sales, including the ramping up sales for new products, and a lot of experience in diabetes, specifically like 25, 30 years with some top name companies in the pharmaceutical industry or in the diabetes industries. And so in talking to the CEO in a private call following up after LD Micro, he's extremely confident that within the first 2 quarters of this year, they're going to sign a large healthcare insurer, and also confident that they'll sign some large corporations. And the plan of attack there is, so their commercialization efforts in the US are going to begin in this way. They're targeting large healthcare insurers and large employers who would offer their product for no cost to the people on their insurance that are covered by their insurance or who are employees of their organization, with the thought being that using this program is going to significantly cut down longer term the costs of people continuing to struggle with diabetes or becoming diabetic, time away from work and so forth. The product itself is fairly inexpensive. So the plan is for companies or the insurers to eat the cost of that, knowing that they're saving money down the road. In addition to that, they're going to later this year introduce a direct-to-consumer product, although their main focus is going to be on signing these larger organizations. But they're also going to be introducing a direct-to-consumer product because there has been a lot of popularity around things like the Noom app and different lifestyle apps, different programs that try to help you with weight loss and managing your glucose levels and things of this nature. And so they think there's a market there. They're not going to spend a huge amount of money on sales and marketing in that area because, again, their focus is on the large organizations, but they feel like it's something that if they, get one or two influencers that start to really push the product and they don't have to spend a lot of money on it, that it could be a huge return for them on that rather small investment. So they're currently in the process of talking to U.S. insurers and corporations. Again, they think something in the first half of this year will be signed and announced. At least one big win, if not more than one. There's some licensing agreements that they're in discussions with now. And then by the end of the year as well, they should roll out in the UK and in Germany. Similarly, they'll be doing the same type of approach there, just about 6 months behind. With that, I guess are we doing Q&A right now, Ben and Rob, or are we waiting to do it together with Florian? I don't know how you want to.
Yeah, sure. Yeah, we'll do a quick Q&A right now. Yeah, we do have two presentations, so we'll make it quick. I'll since I have a pretty good background in digital health, a lot of people know that I've been big in Dario, so I'm going to start with a couple questions, and then we'll open it up for just maybe two max questions after that, so we can go on to Florian's. So thank you for that presentation, first of all. I wanted to know, in terms of continuous glucose monitoring, given the fact that it's pre-revenue, how do you value this compared to at least the two publicly ones I know of, which is Dexcom at 40 billion valuation, and then SENS, I don't know if that's Senestech or something like that, SENS, whatever that company name is, that's a $1 billion valuation.
Right.
So how do you value this?
Yeah, it's a great question, and it's very difficult. And I admitted in my article, it's hard to provide an exact evaluation. So I'm going on a couple of things.
Sorry, it's Sensonics, not Senets. It's Sensonics.
Oh, okay. No. So no, the way that a couple of things I'm looking at. Okay, number one is the previous valuations, that how the market has valued it. Okay, and assuming that if they come out with an announcement, the United Healthcare has kind of been kicked around as probably the most likely healthcare insured that they're the closest with. So if they were to sign United Healthcare, I mean, I talked to a guy that runs a hedge fund the other day, a good sized fund, and was telling him about this name. He'd read my article, and his response when I said about that I'm quite convinced that they're working with and may sign United Healthcare, his response was, that's huge. I mean, that'll be a big move in the stock if something like that's announced. But more than that, what I'm looking at is, in talking to the CEO about break even, about the need to raise cash, they don't think they're going to need to raise any more cash. And he straight up said they wouldn't even consider it unless their share price was at least $15 a share or more. And so and even then, he's not saying that they're going to. He's just saying that I wouldn't even give it any consideration until that point, because we're going to have revenue coming in and our burn rate's not that high given how much cash we currently have. So asking him about break even, he said that with one big win, one big insurer, one big corporation that fully adopts their program, they should be at break even. So at that rate, if I'm thinking, well, okay, then if they get it too, then roughly it should be, add what their current, I think it's going to be $1.5 million burn rate per quarter. Well, if it gets them to even on one, then, if they get 2 or 3, then I'm thinking, well, you add another million a quarter or so. And all of a sudden, you start getting to some nice numbers for earnings. The other things that I look at are they just did a raise back when their stock got up from the Russell inclusion. They did a raise and they did it at 725. So the stock price, especially before I published the article, was well below that 725, where they were able to get the shares placed, and they gave a half warrant at $8 a share, to be able to get a little bit of money down the road if the stock price goes back up above that. So that's something that I look at. Then the final thing, though, to me, and this to me is probably the most convincing, other than what the CEO said about the break even, is the fact that, again, insiders have not sold any shares. So even when it popped, I think the 52-week high when they got around the Russell inclusion was at 16 something a share. Well, I mean, if they weren't selling then they obviously think that that the shares are worth more than that, and there's got to be a reason they think that, and maybe they're wrong. Okay, I mean, there's definitely the possibility they're wrong, but I'm extremely impressed with their business plan and with everything the CEO has told me, and some things that he shared with me have already come true. So one example is he mentioned to me, he made a comment about how, there were going to be, they were expecting, they had a slate of positive PRs that, we would be seeing over the first quarter. Well, like a week after he told me that, they have this announcement of the head of commercialization in the US and then one in the EU. And they were home run hits as far as I'm concerned, if you look at their background. So those are the things that I'm using right now to value it. But you're right, pre-revenue, it's hard.
Great, thank you. Actually, that'll be all I have. So let's open it up. Stephen, if you can poll the room for questions.
And I'm happy to answer questions later in the room, by the way, guys, if you want.
Looks like John Cison has his hand up. I'll mute him. Unmute him.
Hi, Aaron.
Hey, John.
Question. So the product's approved in the US, is that right?
Yeah, so it has partial approval in the US. It's fully approved for what they want to do in the EU. And they expect by the end of the year it will be in the US. The only thing that the difference is, so their product is called Sugar Beet. In the US, they're calling it Pro Beet. The reason being because they are only approved right now as a so-called wellness product. And as such, the user is not able to directly get information in real time about their glucose levels until the FDA approves it. That's the way I understand it.
That makes sense.
So what they do is they just get them from NMRD or from their doctor. They can get it set up to be sent to their doctor, and they can get those numbers sent to them by NMRD or their doctor once a month. So functionally, it's not much difference. Obviously, when they go, they're hoping, when they go to direct to consumer, I think they're in the US, they're waiting for that full approval so that, a user could get it, not even talk to their doctor if they want it. They just get the numbers on their app and the feedback and stuff. So
I got you. So is there a thought that they're going to have a real expensive sales force in the US, or just doing more of a direct to the insurance companies where they can not have a costly sales?
Correct. They do not plan to have a costly sales and marketing force at this time. Will they ever? I don't know, but I don't think they would ever do that based on my conversations with them. I don't think they would ever do that until, they're at least at break even, if not higher, their concentration. But at the same time, they don't want to completely neglect the direct to consumer, because you've seen things like the new map that are really popular, like $300 million of revenue a year now. I think the new map is up to, and they already have this stuff basically set up for what they're going to be doing with the employers and the corporations, because it's all going to be, they're going to be using apps and things like that. And so they might as well. And they did hint at the fact that they're like probably looking to have some social media influencers get behind them. And one thing I'll add to that, John, real quick, is that in the long run, and when I'm talking about the long run, I'm saying in the next year to two, they should also be able to have a product that measures lactate and also cortisol. So they're going to be, they're ultimately looking to be able to give you a very full metabolic panel. But when they get that lactate up, what could be interesting as it relates to social media influencers is the lactate levels are going to be really important to athletes, because it tells them when their body's breaking down, when they need to take a break, how much endurance they actually have. And so that could be a point where you get a major athlete tweeting something out about that to their following. That could be huge.
Right. When we looked at the company a couple of years ago, it seemed like they were more in weight, Tom, but I like the fact that they're looking at type 2s. There's a lot of positive things. I think the CEO is pretty straightforward, and I'm excited you brought it back up. I spent a lot of time with Senseonics, like years and years and hours researching, but definitely the costly sales force, waiting on the insurance coverage, I think, and being just type 1, and then just, I think the environment's changed too now, where there's such a greater incentive to manage your health.
Yeah.
And the digital health thing. So I am excited and look forward to kind of collaborating with you and kind of digging in deeper as they continue to
Thank
move
you.
along.
And if anyone wants to get a call set up with the CEO, I'm happy to help with that. Ben and I actually had a conversation with him on Friday, and I thought he was actually even stronger in that. At one point, it seemed like there had been some progress in the week or two since I talked to him last on the phone. And that is that he seemed extremely confident, like to the point where I almost wonder if he already has a contract in hand or some sort of a informal agreement that they're going to be signing somebody here in the near future.
Well, getting revenue positive versus burning 50 to 100 million a year is definitely much better for shareholders. So hopefully that's the path they stay on.
Yeah, their burn rate right now, I think, is only 1.5 million a quarter.
Yeah, they seem very responsible. They've been slow in going to make sure they don't do that.
Yeah, and I think part of the reason they've been able to do that is because all of these guys, like, if you look, their compensation isn't that high because they work for a privately held NMRD Pharma. And so, unlike other public companies that might be in this sort of stage, like I don't think they feel as pressured to get to market because they have a day job to fall back on. You know what I mean? Like, this is sort of like this could make it crazy. Like, this is going to be bigger than anything they've done, but it's not like they're struggling to pay their bills now.
Which helps.
Yes, right.
Thanks, Aaron.
Great, thanks. I also wanted to add, one of you brought up the lactate and cortisone. So in my conversation with it, which Aaron set up on Friday, that was the most exciting thing to me, was his vision for an integrated, like, hardware and software together. And he really saw this future of medicine at home with all kinds of different hardware devices that can measure different things. I think he mentioned EKG, and that was really exciting for me because that's really been my vision for this space from a long time ago. Like the whole Star Trek thing, where you have a hologram from a distance and is measuring all your stuff with like one device, like that's kind of my vision for the space. And, I see, that's why I got excited about Teladoc and Andrea. So that's like a wild card for me there, right? If they go way beyond diabetes and they become this all for one, stop shop for like everything. So it's interesting.
That's their goal. I mean, I don't know that I'd say for everything, but they will expand significantly. This is just the beginning.
All right, Aaron, we're short of time, so we're gonna have to move to the next presentation.
No, I understand. Like I said, if anybody's got questions, feel free to hit me up in the rooms.
Yep, and we opened up a new, we'll drop the link in today just to keep the conversations organized, NMRD research group. So we'll drop that link in the VIP room so we can keep those conversations streamlined. Thank you again, Aaron.